Welcome back to the channel, or welcome to the channel if it's your first time here. My name is Troy. I'm 29 years old. I've been dividend investing since 2020, and my goal is to retire early off of dividends at 50 years old.
You're crazy.
In this episode, I'm going to be sharing my results and income from my taxable brokerage account over the past month and checking for growth. Before we dive into the goodies, I'm curious to know how much you made in passive income in February, so let me know that down in the comments below. And lastly, if you have an obsession with dividend investing, want to support the channel, or just be nosy and see what I'm up to, make sure you're clicking that subscribe button and ringing the bell so you can stay up with all my content. With that being said, let's go ahead and dig right into this taxable account. Jumping over here on Fidelity, you can see the 11 positions that make up this portfolio. As always, with where I am in my investing journey, one of the primary goals for this account is to grow the account balance over time. Here you'll be able to see my progress on that goal over the past year and over the past month. Last January, I had a balance of $25,131.92. Concluding last month, my balance was sitting at $67,196.27. And now, concluding February, my account balance is up to $69,405.51. As a reminder, I currently have 2 of my 11 positions that are in dormant status with Starbucks and ExxonMobil, since they don't meet my most important criteria, which is outperformance of the S&P 500 over the past 10 years. As time passes, I'll figure out what to do with these holdings if they remain in dormant status for consecutive years, but as of now, I will hold these 2 positions and let the dividends reinvest. As of March 1st, the wife and I's recurring contribution of $833.34 was added into this account to fuel our February purchases, while we each had $583.33 go into each of our Roth IRAs to make up the $2,000 monthly investing budget we set aside. And lastly, as I mentioned in previous recaps, remember that $17,000 of my account balance in this account is being stored in SPAXX as the wife and I's emergency fund to collect the current 4.96% interest while we wait for any emergencies to come up. With that being said, I will have $903.95 to invest in this account for March, adding to the slight remaining cash left in the account from February. Next, let's see which stocks are doing the best for me in this account with my biggest winners. My best performer is Costco, that's up 40.77% or $1,545.19. My second best performer is Microsoft, that's up 36.35% or $1,783.65. And rounding out the top 3, we have AbbVie, that's up 30% or $1,395.33. Now, of course, not all of my stocks are winners, so let me also show you the stocks in the bottom 3 with my biggest losers. My worst performer is currently NextEra Energy, that's down 24.07% or $869.58. My second biggest loser is currently APD, that's down 17.16% or $633.82. And then my third worst performing stock is Starbucks, that's down 2.44% or $105.45. Lastly, let's look down here at the bottom of this screenshot to see that this account continues to do well and is now up 12.81% or $5,317.13. Next, let's check to see how this account stacks up versus the 3 major indexes over the past month. On this screenshot, you'll be able to see 2 different rates of return, time-weighted and money-weighted. Simply put, time-weighted is best used if there's no money going in or out of the account, while money-weighted is best used if there is. Since money is now being added to the account, the money-weighted best fits my situation. You can see that I have a 1-month return of 1.94%, which brings the year-to-date return up to 2.42%, which is currently underperforming the major indexes to this point in 2024. Next, let's head over to my dividend tracking spreadsheet to see what I spent my money on over the past month. With this screenshot, you'll be able to see what I bought, how much I spent, the average cost of each purchase, and how much it added in forward income. The most I spent was $148.84 on APD. The biggest share increase goes to NextEra Energy, where I added 1.544 shares, and APD also had the biggest bump in forward income with $5.42. In total for February, I was able to spend $907.03 on 5.218 shares over the span of 18 trading days, which results in $19.67 in added forward income. Next, I wanted to quickly show you where the current yield for my portfolio sits and any changes to the cost basis of the positions in my account. My yield on cost for this portfolio is now sitting at 2.1%, with the current dividend yield of my holdings being at 2.01%. Looking here, I wanted to show you how my strategy of dollar cost averaging has impacted the cost basis for my positions over the past month. Here you can see that my largest increase in cost basis is with Costco, going from $523.79 per share to $528.44 per share, while my largest decrease in cost basis goes to APD, that went from $286.30 per share to $282.52 per share. As you can tell from my winner slide, a good amount of my holdings are in the green, so as I continue to buy more, the cost basis for those positions will rise, but since my goal is to own more and more shares of quality companies, I'm okay with a little rise in the cost basis. Next, let's take a look to see what the projected annual income is for this account. So what this chart is going to show you is the amount of just dividend income my portfolio is projected to make in the next rolling 12-month period if no money is added and there are no dividend increases from my holdings. Last January, that projection was $494.51, which comes out to $41.21 per month or $1.35 per day. As of the end of last month, those numbers went to a yearly projection of $918.73, which comes out to $76.56 per month or $2.52 per day. And now, to conclude February, I'm sitting at projections of $948.54 for the year, which comes out to $79.05 for the month or $2.60 per day. Next, let's check to see who paid me in February and how much I made in passive income. Before we get to my numbers, don't forget to let me know what you made in February down in the comments below so I can cheer you on. All right, in total, I received 5 dividend payments and 1 interest payment. On February 12th, I received $21.03 from APD, which is up from the $11.09 this time last year and the $17.70 received the last time they paid me. On February 15th, I received $7.10 from Apple, which is up from the $4.13 this time last year and the $6.38 received the last time they paid me. Again on February 15th, I received another $51.19, this time from AbbVie, which is up from the $29.33 this time last year and the $43.38 received the last time they paid me. The next day, on February 16th, I received $7.15 from Costco, which is my newest position, so I don't have a prior year example, but it is up from the $6.24 received the last time they paid me. On February 23rd, I received $25.25 from Starbucks, which is up from the $13.89 this time last year and the $22.90 received the last time they paid me. And finally, on February 29th, I received $69.23 from SPAXX as an interest payment on the cash sitting in the account, which is up from the 2 cents this time last year and coming down from the $74.03 received last month. With the $59.19 received from AbbVie on February 15th and the $69.23 from SPAXX on February 29th, I have now pushed past both the $1,700 and $1,800 mark in career earnings in this retire early account. These last two $100 jumps took me just 15 and 14 days respectively to achieve, and now I find myself wishing time would pass quicker so I can keep this snowball rolling. I've spoken about this table in previous recaps as well as my interview series, but I'll say it again. If you're not tracking this on your own, give it a try as it's super motivating. Next, let's go ahead and add these numbers up and check to see my progress when compared to last February. Other than that snowball chart I just showed you, this is my favorite tab on my spreadsheet as it does a very good job of showing me my progress over time by comparing past performance with current performance. Despite beginning my investing journey in 2020, I did not get my first February dividend until 2021, where I made $5.98. Then in 2022, I made a pretty good 12-month jump up to $28.33, which represented a 373.7% year-over-year increase. The following year, in February of 2023, those numbers jumped up again to $58.58 for the month, representing a 106.8% year-over-year increase, all of which brings us to February of 2024, where I was able to make another massive jump up to $180.95, which is a boost of 208.9% when compared to this time last year. Down here at the bottom, you can see that in just the first 2 months of 2024, I've already eclipsed my full year of dividend earnings from just 2 years ago in 2022, and I'm super excited to see where this year takes me in dividends. And just like that, that wraps up my February monthly recap. Be sure to leave your February numbers down in the comments below so I can cheer you on, and don't forget to subscribe and ring the bell so you can be part of the Dividend Obsession community. And if you want to begin your own dividend investing journey or know somebody that does, make sure you check out this video. But until next time, see you.